Hello, everybody watching out there. Hope everyone is well. Mic is working. Audio, everyone can hear me?
All good, Alex. Yeah, we can hear you.
Awesome, guys. So as you know, we have some amazing guests today. And if we can start off quickly with an intro, just maybe 30 seconds each for you to tell us who you are, for those who do not know you. And for those who do not know you, you're in for a ride today. This is going to be really, really exciting. So Vance, if you can kick off, let's go for it.
Certainly. I'm Vance Spencer. I'm one of the partners at Framework. We're a DeFi-focused seed fund.
Hi, I'm David Bleznak. I'm the founder and CEO of Total, and at Total, we're a DEX aggregator.
Hi, everyone. I'm DeFi Dad. I am a DeFi super user, educator, and investor, and I'm also a part of the core team at Zapper.
Hi, everyone. Partner at Parify Capital. We're a DeFi-focused fund, and happy to be here.
Super excited, guys. It's going to be really, really hot today. My name is Alex Fazel. I work at Swissborg, and I'm also the host at Kryptonize TV on YouTube. So please have a look there. And first question, gentlemen, I think it's a really important question. One of the most meaningful conversations that I had this year was with Eric Voorhees. And Voorhees was telling me, when I asked him the question about what was the definition of Bitcoin, because there have been so many changes in defining Bitcoin, from electronic peer-to-peer cash, digital gold, gold 2.0, the absolute store of value, et cetera, et cetera. I would love to hear from you guys, and maybe kicking off with you, DeFi Dad. What is the definition of DeFi in 2021? And I know you're really good at making things super simple and digestible for the newbies as well. So if you could kick off on what is the definition of DeFi in 2021 and what matters the most to you?
Yeah, one of the hard parts about defining DeFi is you normally have to talk with someone about their experience with finance. But I think more generally speaking, for those of us that are already in crypto, I like to think of DeFi as it's peer-to-peer digital finance. And what really is the linchpin here is it has to be using cryptographically provable, scarce digital assets. So this is all pretty standard stuff for us if you're into Bitcoin already, or if you're into Ether. But where DeFi sort of launches off of, I think, what Ether and Bitcoin established with a digital store of value is you start to build parallel use cases to what's in finance. And so TLDR is you can do everything from trading to lending and borrowing, insurance options. Basically, it's every financial use case and then new digitally native use cases that are built with DeFi. So, and one last thing, no KYC, no AML, no sign up, just hook up your wallet, your self-custody Web3 wallet like a MetaMask, and you're good to go.
Beautifully put, DeFi Dad. That was a great definition. Santiago, how do you feel about this? Do you agree with DeFi Dad's definition? And just speaking of which, no KYC is one of the big topics like these days. Is that a really critical component for you as well, Santiago, when it comes to DeFi?
To some extent it is. I mean, I think it's this idea that it's a open, permissionless system that anyone can come with. Basically, anyone with an internet connection can just take advantage of financial services that otherwise are pretty siloed or hard to access for most of the world's population. So there's certainly an element of that. I would extend that for, say, a big part of why I think DeFi is super powerful is this idea that the programmability of money and minimizing counterparty risk. Like, generally speaking, like, humans are really bad. At some point, they make mistakes. And there are very high stakes in finance. And so that creates a lot of fragility in the financial system, where no one really knows when you deposit your money in a bank. You don't know how that money is being used. And so you need all this regulation to make sure that someone is policing bankers. But time and time again, we learned that those bankers make mistakes or do really stupid stuff with your money, i.e. the 2008 financial crisis. And the whole idea of DeFi is to create a more resilient, open, like where code is law and you program if-then statements to money, where you don't need a banker and you're in control of your money and you minimize counterparty risk. And that inherently creates a much more resilient, strong, anti-fragile system. And that's really what's so powerful about DeFi, more so than just anyone can come in here. The combination of both things that make a DeFi, I think, the future of France, as we call it.
Awesome. Dave, I'd love to hear your comments on that. Is there anything missing into that definition to make it the perfect one? Obviously, you mentioned no KYC. A lot of people are talking about their own definitions. How do you define it? Is there anything else that really, really matters when understanding DeFi?
Yeah, I think these guys have started off pretty good with the definition here. I would agree with most of what's been said. To me, it's permissionless finance. It's open finance, as some people have even tried to rebrand the space. And I would agree with that. It's, the killer application or the killer feature of DeFi is the permissionless aspect. Anyone being able to access it without the permission of a custodian or of an intermediary really is that killer feature for all the reasons that Santiago pointed out and DeFi Dad started on there. And I would say one other piece that's that's really important to DeFi and to Total specifically is the composability of these different applications that run on Ethereum and other open blockchains. So at Total, we do aggregation of decentralized exchanges. We focus on getting the best price for your, swapping your assets on decentralized exchanges. And the composability of the applications allows us to be that aggregator without asking permission of any of the venues. We simply integrate with each of the decentralized exchanges that exist and live on Ethereum. And then we provide the best execution by routing orders, to the best venue or maybe to multiple venues in one trade. So the composability aspect of the space, I would say, in addition, is another part of the definition.
Thank you so much, David. Obviously, Vance, you have probably the most difficult part because a lot has been said, but we just had non-custodial as well, as in control and ownership, on top of being open, permissionless, accessible, no KYC. Anything else that, Vance, really matters to you?
I think the rest of the panelists did a pretty good job describing kind of what DeFi is. Blockchains are built for a trustless transfer of value, and any logic on top of that is DeFi. So it could be an escrow contract, an insurance contract, borrow, lend, trading, derivatives. But really, the whole point is that these things are open developer platforms that are built for trustless value transfer, and you can code on top of them, which is DeFi. So that's kind of, I think the rest of the definition, but the other panelists did a pretty good job.
Awesome, Vance. We'll stick with you because you had the hardest part to answer. So question number 2, I'd love to ask you guys, as you know, there have been many loopholes recently, hacks, exploits with Titan, Belt Finance, Visor, et cetera, et cetera. What are the biggest risks and what are the lessons that we've learned up to now? Vance, if we can kick off with you.
Yeah, so I think the Ethereum community has gotten pretty good at building robust smart contract auditing, formal verification, even kind of like peer-to-peer code reviews where things are kind of reviewed in a tournament style, to the extent that, a lot of the hacks that were happening on Ethereum, a year ago, aren't really happening today, or at least they're happening in much smaller size. And you've seen these hacks shift to different ecosystems that don't have the same kind of level of developer, quality of code, BSC, even some things on Matic. And I think that these problems will continue to spread across, the multiple layer ones as they're different code execution environments. It's written in different languages, like things on Solana, for instance. I don't know if there's a security auditing firm that works on those projects quite yet. So I think that a lot of kind of the standards and the tooling have been built out for Ethereum, and these other ecosystems will have that in the near future. But I think it's just been kind of a general maturation of the space and the standards that we have. And ultimately, it was good to get those out of the way at a smaller, TVL AUM size, because the ones that you see on modern day scaled blockchains like BSC are 150 million plus in a single fell swoop. So hopefully that doesn't continue to happen, but there's always a chance that things don't kind of evolve.
Awesome. And Santiago, I know that you are quite vocal about Ethereum as well. Do you agree with what Vance had to say here?
Yeah, I definitely agree with that. I think a lot of the development that we see is in Ethereum, but there's certainly a lot of other interesting ecosystems cropping up. It's important to realize that this space is very, very early and nascent, and so I don't really know if you're investing in AOL or MySpace or Facebook or Google. So generally, I think there's a lot of experimentation. The nice thing about crypto and DeFi relative to the internet is that everything is open source, and so it moves much faster than what you saw on the internet. And so, there's going to be a lot of experimentation. There's going to be the side effects of experimentation, of course, as you alluded to, are hacks, unfortunately, are failures, and of course, as we know, failures in crypto can be pretty devastating. So it's important for everyone to realize that it is, to some extent, a very risky adversarial environment, and so you just need to come into this thinking that is a very real possibility, and sort of manage risk accordingly.
Awesome. Thank you so much, Santiago. DeFi Dad, you're really good at breaking down things very simply for people following you. In terms of the risk and sides of things, obviously we just heard from Vance and Santiago that Ethereum has more tooling, has more auditing. It just happens to be more experienced, right, in offering these applications, these decentralized applications. But what are the risks here, and how do you communicate them with your crowd?
Yeah, see, this is something I think that we've done a much better job of this bull run as a community. I think that the conversation around risk has been very upfront, this time around. So, I can speak personally to like every tutorial I've ever made, whether it's through like a Zapper Learn, or whether it's through like my own YouTube. We talk openly about the fact that there's smart contract bug risk. We talk about the fact that there can be Oracle failures. There's systemic risk just in the fact that everything is so composable. There's even I think more outlier risk of like what happens if pegged assets like tokenized Bitcoin or stable coins depeg. But at the end of the day, I think the reason the community obviously keeps growing is people learn about those risks and then they see what the returns are, or what the potential returns are. And so at the end of the day, DeFi is about letting you be an adult and make your own decisions. And so as long as people are well informed, I sleep well at night. I think what's sad is when you see newcomers who probably have a tougher time differentiating between what's more of like a blue chip project versus one that is a sloppy or copy and paste. Some of the ones you mentioned there, I would definitely classify as sloppy copy and paste. And anyways, long story short, anyone can get burned. So, risk management, just knowing how to size your position in DeFi, it's one of the most useful tools you can learn. Just understanding, I'm not going to put 50% of my portfolio into a DeFi farm. I need to think about what happens if I lose it all, and again, size that position appropriately.
Thank you so much for that answer, DeFi Dad. And anything to add, Dave, on what DeFi Dad was saying about sizing your risk, understanding risk management? What are some lessons that you've learned up until now, until 2021, with regards to DeFi?
Yeah, all that's really important. I think there's an onus on the individual, even more in DeFi than in the traditional finance world without protections that exist. You really need to be, pragmatic. You need to be conservative. You need to really understand your risks. I mean, generally speaking on the topic, I think it's awesome. I think the greatest parts of DeFi, and as we're talking about, can also be its greatest drawbacks, which is, it's similar to the concept of America, right? Freedom of choice, freedom of decision-making, and then people make bad decisions. So then they have to live with those bad decisions. So similarly, in an open free market, we're seeing creative destruction in real time. And seeing that happen, you're going to see some things you don't want to see. But again, that's what we fought for. That's what we want to see, is we want to see this open, permissionless system that doesn't have interference, doesn't have, it's a real free market. And when you have a real free market, you're going to have these instances, you're going to have these drawbacks where the onus is on the individual to be more, take more responsibility for themselves. And that's hard for people to do because they're used to a system where there are a lot of levers that are put in place to protect them, but that also creates the deadweight loss in the economics of the traditional system. So that's core to the entire value proposition and also the drawback. And I would say that the biggest threat really isn't these components, these risks of, I think the free market will figure it out a lot faster than a non-free market. You'll see things, and we've already seen it, flashes of it. There's insurance, there's mutuals, there's things coming about, there's audit groups, there's ways to reinsure. There's all these types of cool free market things that are coming about as part of this, as I mentioned, creative destruction in real time. To me, the biggest threat is regulation, is the government. Them coming in and really trying to put a KYC AML, trying to make a permission system within DeFi, trying to squash innovation. Maybe not even on purpose because they think they're doing the right thing. So to me, that's even bigger risk than what we see going on right now.
A lot of people are talking about those risks. Thank you so much, gentlemen, for sharing. So far, guys, have you seen, we've talked about the definition of DeFi. We've talked about what are the lessons learned and the risks up until 2021. So I'd love to ask you about the current state of the market. Santiago, this is something that seems to interest you a lot. Obviously, a lot of people are freaking out. Oh, are we in a bear market? What's going on? How does this impact DeFi specifically? What are the pros and cons? There's always two facets to every story. So if you can kick off by sharing a more macro perspective on where we are right now, Santiago, that'd be amazing.
Yeah, there's a lot to unpack there, but I'll start from first principles. You either believe or you don't believe it's just going to transform finance, full stop, right? If you take if you have a low in time preference and you take a 2, 3, 5, 10-year view, then it's hard for me to believe that this is not going to materially change finance. Why even by themselves? You look at PayPal, you look at Visa. I think the Pandora's box to some extent has been opened. And people realize that there's a better way to do things. And banks themselves are even motivated. Why? Because they can do things faster, better, cheaper. And any technology that gives you not a marginal improvement, but a step in improvement to your current workflow, even to traditional financial institutions, is going to get adopted, right? And so I think it's a matter of time where you start seeing real mainstream adoption of this stuff. And most people might not even realize that all their current apps on their phone, whether it's JP Morgan or Wells Fargo or Robinhood, a lot of those applications might be powered by DeFi in a not too distant future. They might not even care about it. They might not even know what DeFi is, but what they'll see is a lower interest rate, a more competitive interest rate. They can issue mortgages in seconds, not days, without having to constantly share all this information, across banks. They might get access to cheaper credit, better rates. And so generally speaking, I think that's where DeFi is going. Of course, there's a discussion around, are we in a current pullback? And of course, the markets have rallied quite a bit over the last year. It's hard for me to comment on that because I'm not here. I can't time these markets. It's impossible. I haven't met anyone that can do that systematically. If there's someone out there, I'd love for him to reach out to me because I can't think of any investor throughout history that has been able to predict markets and market cycles. They can draw lines and charts, which is funny. But I think if you stay true and close to the metal, to the founders, I think there's a lot of innovation happening. There's a lot of, on the human capital side of things, to me, that's a leading indicator. You see more developers, to Vance's point. These are top quality developers. 5 years ago, you would have gotten crappy developers interested in this stuff. Now you get to see people have really high opportunity costs at Facebook, at Brex, and some of these tier 1 startups in Silicon Valley and elsewhere, really interested in DeFi because it's a hard problem to solve and there's a lot of innovation. So I think developers naturally gravitate towards open source communities. And so the combination of all that leads me to believe that this is going to be explosive. Of course, don't get too excited. Don't play around too much with leverage. Don't do dumb stuff, right? The what I like to focus on is, and the last thing I'll say is, if you're patient and you just stay close to founders and help them and join communities and be helpful to projects that you affiliate yourself with, I think you'll realize that there's a lot of true innovation here. And to me, that's most exciting.
I'd love a comment on that. Thank you so much, Santiago. So Vance, obviously we went through close to $100 billion of total value locked in DeFi to 50 today. Are you on the same wavelength as Santiago, where this is just a flash in the pan and fundamentally what it represents, it's much bigger and it's not a big deal of what's happening currently in the markets?
Yeah, I'm on that same wavelength in terms of belief in DeFi and the idea that it will transform finance in the next 10 years. I think it'll happen faster than that. I do think it's worth noting that, this isn't a dip. Some of these coins are down 80-90%. And so now it's kind of about, all right, which ones will emerge, which ones will die. And if you use 2017 as heuristic, and I think it's a bad heuristic, but basically all we have to go off of is that 95% of these things will be worthless. And the 5% that are worth something will be worth a lot. And so, now is the time for people to kind of do some soul searching, do some more research into the things that they may have invested in without fully understanding, and get a good grok on who's going to deliver and who's just going to kind of fade into obscurity. And I think a lot of these teams will kind of fade into obscurity because they either don't have the right team, they don't have the right product, they've raised too much, the incentives are misaligned. And so I'm looking forward to seeing a lot of that exit the market. And I think it's totally fine to acknowledge that these things are down so far. I think it's a healthy part of the process. When, the thing that worries me the most is, your 18th developer on your protocol that joined 2 months ago, say this was at the peak, he's now, worth 20, 30, $40 million. And there's really no reason for him to work on the protocol. He's already rich, he can do it out of the goodness of his heart and the desire to deliver a product, but the incentives are fundamentally misaligned relative to the amount of progress that they've made on this product. And so for those people, for the people that are now getting into the space, these Web2 developers that need to be properly incentivized, that's kind of the thing that this dip means to me, or whatever this is. And I'm happy to see it. I think it's a good investment opportunity. We're certainly buying stuff. We're as optimistic as ever. We think there's a lot of catalysts, and it doesn't really, perturb us too much.
Amazing, Vance. I felt like I was a bit of a negative Nancy today, so it's good that you bring a little bit of positivity there as well. David, any comments? Are you also seeing this extremely positively where, it's time for people to do some fundamental research, try to find that 5% of projects? What are some other things that you're looking at in terms of the current market conditions?
Yeah, I mean, we know specifically for Total, the approach that we've taken and the area of the industry that we focus on being exchange, being decentralized exchange. Obviously, we're involved with a lot of the volume and of these long tail assets. And, the thesis behind our approach being that we, personally, a reason I've gotten into that part of the space is because I could, just like as Santiago had pointed out, not going to pick which of these are going to go, up or down. And it's almost impossible to do that, especially as you go even further on the long tail. It gets even harder to pick out that, those winners. So by being, an enabler of the process, right, being part of that exchange process, peer to peer, and facilitating that part of the business, that part of the industry, we think that that's going to continue, right? Like there's going to be more and more assets. There's going to be more and more individuals involved in the space. There'll be more and more users. So as long as the entire space grows, and as long as the interest in the user base grows, and we're very early on in the life cycle or the lifetime of this industry, and so that's we're making a leverage bet on the entire industry itself. So yeah, I think we definitely take a long-term view. I think projects that continue to take a long-term view are going to be winners, are going to setting themselves up to grow in an organic way, and really follow the growth of the actual growth of the space, not get caught up in the hype cycles, not get caught up in the short-term blips, but really position themselves to grow organically with the size of the market and where we are in the space.
It's funny, David, because some people actually say that where the real money is made is during bear markets, through that research, for really understanding, what's going on, and then it happens through asymmetrical returns eventually. But DeFi Dad, any comments, man? Like so far, this has been really awesome. Would love to hear your take on all this.
Yeah, I mean, I'm as confused as anyone about like where we are in this cycle, but because my time horizon is so much longer, because I'm thinking, like my view of DeFi is 10, 20 years out. So I think about a lot of the things that everyone mentioned here. Most importantly, I'd say it's been one of the few inflection points in my life with technology where once I saw what DeFi allowed me to do, I was like, I cannot ever unsee what DeFi can do for me. And so it went from an alternative investment to my default investment. I keep less than 1% of any money in a bank now. I rely almost entirely on DeFi. So that's something different this cycle. Is most DeFi investors' money isn't going back into fiat. It'll just go into stable coins. And by going back into stable coins, they're likely to try to lend that or earn some sort of yield on it. So there's going to be lots of opportunities, regardless of whether this is a dip in a larger bull run or whether this is the start of an actual bear cycle. I only started in 2017, so I remember all the bullshit I got to hear from all the talking heads. I remember how many times I was told that, we were going to continue another 18 months and how none of those people are ever held accountable for that. So what I've tried to do instead, because of the nature of DeFi, is I am focused on holding those assets that I think are a great store of value. What assets are idle, I'm trying to put those to work. I'm trying to maximize what earnings I can get out of those without oversizing my position, without risking too much that I could lose it all in like a smart contract hack. And I am focused on yield farming through tools like Zapper Farm, zapper.fi/farm. I'm using that because I'm trying to earn tokens that I want to hold long term. And so it's not a matter of me farming and dumping. I'm earning stuff that I would like to earn. Like I'm in some of the Barn Bridge yield farming pools because I think Barn Bridge has like a long-term vision that can succeed. And then lastly, by like farming and earning that passive income, the last step of it is what can I do to participate or to strengthen the community? And sometimes that's just people hopping in a Discord and asking some questions. For me, it's maybe making like a DeFi tutorial or just trying to like help other people understand, what vision they're trying to realize. So, this is so different than last cycle. Last cycle, it was buy something on an exchange, you traded if you knew how to trade, or you attempted to trade and lost most of your money. And then we all lamented, what's going to happen here? And meanwhile, some of us then chose to build. This time, you don't have to be a builder to be a crucial component of our ecosystem. You can simply be a liquidity provider or some sort of lender, and that's doing a lot of good for the greater DeFi community. Namely, I would say Ethereum, and I think Polygon's got a thriving community, and then I'm paying attention to other stuff being built on other blockchains.
Amazing, thank you so much. And I think there's some. Yeah, please go ahead, Santiago. Go ahead.
Yeah, just to add to that, which I think in 2012, 2014, 2017, like throughout that time, like when you try to explain crypto to someone, they didn't really get it. This time they can use it, and there's a lot of utility. And I think like once you send money using a stable coin, you don't want to use wire transfers, right? And I think that's a big difference between this time around. I don't want to say this cycle, just this time around. There's a lot of usability in the system. And anyone that is interacted with DeFi, as a lot of folks have said here, it's hard to unsee it. It's hard to not want to play around with it. It's hard not to be fascinated by it, whether you're a professional bond trader or an investment banker or hedge fund manager or just a regular person. There's a lot of utility. There's a lot of activity in this space that's unique and inherent to DeFi. Now, not all of crypto has that. There's a lot of fluff out there. There's still a lot of fluff out there. There's stuff that should be worth anything that is worth billions. And to me, there's sort of a tale of two cities. You have a very productive ecosystem that is providing a lot of value that is non-speculatively driven, or to some extent does not rely on pure speculation. That's your true utility. And I think that's very different. That's very unique of this particular moment in crypto.
Amazing, Santiago. And I really think there's so many gems that have been shared throughout this conversation. Very, very meaningful. Before we end, guys, if we talked about, the definition, we talked about some very valuable tips, finding asymmetrical projects, that 5%, thinking long-term, researching if we go on a side or bear market, and really think long-term to continue to earn yields, to farm the right tokens that we believe have potential in the future. I would love to ask you guys a final question about the future, right? And I believe, Santiago, you mentioned something that was really, really cool, which is, applications like Robinhood and other centralized applications will be using DeFi without even knowing it. And I guess that's a little bit of a glance in the future. If you guys could just share about, just 30 to 60 seconds maximum on what is the development that excites you the most? What is the most beautiful picture that you see in a year, 2 years, 5 years from now? That'd be absolutely amazing. And Vance, if we can kick off with you, buddy.
The most beautiful picture I see of DeFi. So, I think vertically focused applications focused on, Latin America, Africa, Southeast Asia. These are just better, faster, cheaper financial services for those people specifically. In the US, it's kind of like, your bank is okay, it's not great, but there's still a fundamentally solid financial system under you. For those people, it's just, that's hundreds of millions, if not billions of people that are going to be on-roaded to this stuff. And that really forms the basis of this global interconnected financial system that, then we can build, more functionality, more interconnectedness. And with things like layer twos and kind of more intricate and sophisticated financial products being built on top of those, that's really where I see the space going. And I think that's a big component of it. On the US side, I'm actually looking forward to, regulatory clarity. I think, it won't be as scary as people think. It probably won't be the exact version of DeFi that we would prefer, but it won't be too big of a deviation either. And so I welcome that stuff. I don't think it's going to be coming for another couple of years. So there's always the chance that DeFi can just, grow and get to a point where, we're demonstrating the benefits and why this should exist before we have to have that conversation. But overall, I'm really optimistic. I know it seems like a shitty couple of weeks in the market, but that really doesn't matter over even a year, 2-year time frame.
Thank you so much, Vance. David?
I would say, my optimistic view, I would say I would really like to see some of these other countries in the world who have the opportunity to take a leap forward, similar to how telecommunications in some of these countries leaped, having landlines and other types of internet connections in home to straight to mobile. Similarly, and with finance, they have the opportunity to do that here by leaping over some of the other traditional finance, fintech, leap over fintech, if you will, straight to DeFi. And I think some of these countries, in Africa, in Southeast Asia, in South America and Central America, have the opportunity to do, not having the shackles of the traditional finance system like the US or Europe or others.
Awesome. Thank you so much, David. So we have the regions that need mobile apps to make it more user-friendly and increase adoption. DeFi Dad.
I'm biased, but I always say the only thing that's holding us back is education. I think that the tech is actually ahead of where users are. And, it's part of the reason, like, I've been very grateful to work at Zapper. All we do is focus on allowing users to more easily find the right opportunities. So you can search like thousands of yield farming and liquidity provisions on zapper.fi. But once you get there, it's just a few clicks versus like all the other steps you'd follow on a lot of other websites. Anyways, long story short, though, I think in a few years, like, we're going to all be transacting, for pennies per transaction. Speed will no longer be an issue. Speed works on other blockchains right now. Ethereum became like the hottest club in New York City, and there was too long a line out the door. And so we're catching up. We're scaling up to the demand that everyone wants to transact on Ethereum. I just say, like, it's impossible to unsee what you can do there, and we just need that many more people to learn about those opportunities, because many people in the world urgently need these financial services. I'm more excited for them, the way Vance was mentioning, versus like, hey, trust fund kid in New York, can I show you how to earn with your crypto? Like, I don't give a shit about that person. I want someone in Central America who has no access to any sort of banking services to be able to use DeFi.
That makes a lot of sense. Thank you so much, DeFi Dan. And last but not least, Santiago, last word before we wrap up.
Yeah, look, DeFi is not perfect. It's very early. We need better capital efficiency. We need a reputation layer to do under collateralized loans. We need better security, better standards. There can be a lot of hacks, but nonetheless, like, I think over time there will be more liquidity to the space. I think from my vantage point, I think we'll start to see larger and larger financial institutions play in this space for the sheer reason that they can do things and streamline their operations. I think you'll start seeing a lot of loans being underwritten on chain and in Aave in a permission market or a compound chain. Why? Because they can increase order of magnitude or two the number of mortgages they can issue on chain. And so there's really no reason why you should be doing stuff in the real world when you can do it through a blockchain. Where you know the rules of the game, where information's transparent, where rates are more competitive, and ultimately, the what I'm most excited about in all of this is, the people that are going to benefit the most out of everything in this system is the consumer. There's going to be much more consumer preference, and the second piece is I think it's pretty fascinating that more and more you're meeting human capital with actual capital that moves at the speed of information. And so the innovation that you're seeing in DeFi is astounding in my mind. I can't think of any other industry that is seeing this level of innovation. And so I think like the compounding effects of that are really encouraging. I think we haven't figured it out all yet. This system is not perfect, but I think you can always bet on human creativity and ingenuity to build systems that are much better than exist today. So really exciting for the future of DeFi.
Vance, David, DeFi Dad, Santiago, thank you so much for your time today. Please, guys, remember that all of these gentlemen are very active on Twitter, so please follow them to get more information related to DeFi. People who have the DNA, the love, the passion, and the identity to follow what this movement is creating. Thank you so much for watching, guys.
Thanks, Alex.